Good day, everybody. I hope everybody is doing well today. So, I just wanted to make another video today to discuss one of the biggest questions that a lot of startup entrepreneurs and also critics of entrepreneurs make. So, they all say that 90% of startups fail. And so, the question to that answer, is it true? Yes, it's true, and no, it's not true. So let me break it down. If somebody wants to start a business and the deterrence of them starting that business is, well, 90% failure rate, so there's only a 10% uh, rate of success, and maybe out of that 10%, 1% or maybe less than 1% become a home run. Now, that doesn't mean that, okay, we give up and we don't do anything, right? In order to increase the odds of success, we need to first dissect and figure out why a lot of these startups fail. So, some of the common issues we'll look at things like credit issues or lack of paying credit, paying expenses, debt payments, purchasing, which all comes back to a lack of planning. So when we look at structuring a business, one of the things that we have to really take into consideration is to make sure that, number one, that we establish a business that is potentially a scalable business, right? So if you're opening a restaurant or you're opening, a small business down the street, again, that's not a bad thing to do if that's what you want to do. However, the scalability of that business is not as great as setting up a software company that can become eventually a globally scalable business. So that's scalability is a very important factor that we have to look at if we want to survive as a business and hopefully become one of the big boys, right? One of the larger companies. So every company out there they've all started somewhere. Okay. So the basics is we have to make sure that when we are establishing a company, from a scalable standpoint, you got to start small to a point where we can manage the expense of the business. And then as we kind of grow that business, we scale it, we can then start looking at, ways to raise capital and kind of grow that venture, right? So one of the other reasons is businesses are undercapitalized. So like with my startup, obviously I'm using my own money, but I have my own little plan that I've put in place that works for me. And so, you have to really think outside of the box in order to make it work. So it could be lack of funds, low revenue, cash flow problem. So a cash flow problem is not so much that you don't have the revenue. A lot of businesses, they give credit. And depending on who they're selling to, some businesses will sell to government, big chain stores where they demand 90-day credit. I know government contracts, I've seen credit up to 120 days. So you can have $5 or $10 million of revenue, but now you got to wait 6 months to get your money. So there are ways that you can discount those receivables, but you're losing money that way. But that can have an effect on your cash flow, which you need to be able to pay the expenses of your business. So these are some of this all comes down to planning. So we always want to anticipate potential problems that come up. So when we have a proper plan, we can reduce the now from 90%, the failure rate now drops to 50%. So now you got a 50-50 chance of success. So just that alone will eliminate some of that risk. The other issues that I've seen through working on different projects are partnership issues. Now, luckily in our business we have awesome team, and so thank God everything is going smoothly. But there are cases where you meet people that you have a perfect deal. And so, there's somebody that gets greedy or they want to, take most of the share, or whatever the case is, and that can kind of create a failure, right? A few years back, we were looking at a project with a group of people. And so, initially we were going to all have shares in the project, and then this individual was greedy. And of course, at the end of the day, the whole thing fell apart because, so these things happen. That contributes to that 90% failure. Sometimes it's leadership issues, right? When you look at, leaders like Elon Musk, that guy works 100 hours a week. I mean, he works hard. He puts a lot of time and effort, and that's why he's successful. So you have to lead by example. Your employees in your organization are going to be looking up to you. And so by being a good leader, leading by example. And if you're at the startup level, you probably have to go into the trenches yourself. You're not going to sit in some big fancy office right away. You want to be able to get in there, do what has to be done to make that business a success, right? So you lead by example. Marketing is very important, and that's probably one of the most challenging tasks. Because when you are creating a product or a service, marketing is key, and that's why a lot of businesses fail. A lot of it's because there's they don't have a marketing plan, they don't have a go-to market plan. Okay, great, we have this product, now what? So we go in, we have to conduct market research. Now with artificial intelligence software that's in the market today, it makes it a lot easier to create a more accurate marketing plan. So you need to understand who your target audience is, who's going to be buying our product, what is the best target audience that's going to increase our success rate. So when we look at all of these different variables, now we take that 90% failure rate and we drop it down even further, right? So don't let the 90% failure rate, because that's the overall failure rate. It's not like, everybody's going to fail. That's just, people just go in with a blind eye and, okay, let's do this. And of course, you're going to fail, right? When you're looking at doing a business, don't look at it as a transaction. Look at it as from a visionary point of view, right? What are you trying to sell, and what problem are you trying to solve, right? So at the end of the day, when you're selling your product or your service to the market, it's very important that you that you convey that message from a marketing standpoint, and to be able to get people engaged and get them on board. So of course, we live in a crowded market. Even if we have a unique product, people are busy, their minds are all over the place. So you got to be able to grab that audience, and that's not an easy thing to do, but of course you want to connect with the right people to be able to guide you as to how that's done. Growing too fast. Now, growth is great. I love growth, but you don't want to grow too fast. So if we were to take our product and go international right away, and we were to have 10 million users right away, it would be a disaster. Why is that? Not that I don't want the business, because you don't have the infrastructure, right? You need the proper staffing, you need the proper office space, you need the proper infrastructure to be able to support that level of business. So when you're growing, our strategy is we're going to go city by city. Eventually, we're going to go into high growth mode, but we want to make sure that this is done right? So you don't want to grow too fast. Growing fast, I'm saying day one. I mean, you can have a 5-year or a 10-year plan. Now, 10 years is way off. A lot can happen, but a 5-year plan is something that you want to have in place. Even a 1-year short-term plan to kind of get you off the ground and really target that audience. And then once we get that, then once we figure out what model works, you take that model and you duplicate it in other markets, right? So it's just a matter of finding that one model, you tweak it in the different markets that we go in, and then away we go. So that requires vision, it requires leadership, it requires a good team. And of course, a lot of businesses also have team issues, right? People not getting along, arguments, this and that. So there is no such thing as a perfect team, but it's very important that the team members work together. So that's something that we really got to look at and take into consideration when we're trying to reduce that failure rate. Um, Now, those are just the operational leadership issues. The other factor that's going to substantially increase your success rate is, are we building something that people need? So, from a marketing standpoint, it's very important to understand trends. Where is the market going, right? Where are we heading in the market? So, when we look at trends, people are moving towards automation, right? So, you look at Uber, you look at Lyft, you look at Uber Eats, people are, now they're booking a taxi using an app, using an on demand system. One of our competitors, TaskRabbit, well, their system is completely different than ours. They're not using an on-demand system, but I was talking to my banker, and she supports apps like that. And so those applications are more, people go and search, and where we're kind of using the Uber model for the same type of demographics that pretty much TaskRabbit and Jiffy's and other apps that are in the market today. So I'm not saying we're the first, but I think we are more unique because we can kind of take all of those competitors and combine them together and create a more efficient and effective system. Now, competition doesn't worry me. I love competition because when I look at the competition, that says a lot about the market. The market is still young because people are still buying services the old-fashioned way. They're going on Craigslist, they're going on Google. You go on Facebook, recommend me this person. So there's still that going on. So, but because that on-demand market is, the trends are, going in that direction, definitely over the next 5 or 10 years, we're going to see huge growth in freelance. So we look at Fiverr.com, which their target audience, their focus is primarily the remote services, right? So what we're kind of focusing on the local services, so services that need to be done on site, right? And so I'm not going to get into the specifics because we don't want to share all the trade secrets, but at the end of the day, it's important to really know your market and know where things are going. And so we looked at some of the growth rates for freelance market, and it's going to triple over the next 5 to 6 years. So this is, predictable forecasts for the overall freelance market. And I think that also includes, people working, people want to move away from corporate jobs. They want to do, they want to work on their own, right? That's pretty much where we're heading. So when you look at all of that, now we take that 90%. And so we ran an algorithm on AI for our project, and we came out with an 80% success rate based on all of the variables that were inputted into the app. 80%. So we flipped it. We're not a 90% failure. So you can't really base it on that 90%. That's just a number that's been around for decades. As far as I can remember, it's a magic number. I don't even think it's a true number. It could be more or less, but at the end of the day, don't let that fear of failure deter you or stop you from achieving your goals. I think that it's very important that you do your research and that you you kind of get the right business model in place, and you'll be able to create a successful product. And I think when you look at Airbnb, I love their story. I mean, for the first 3 or 4 years, those guys were living off of, macaroni and cheese, like they put everything at it, they threw all their money at it, and they, the first 4 or 5 years, they were not doing so well. And now they're one of the biggest, apps for booking accommodations in people's homes. So it's, and of course you're gonna get the critics. So there's other apps, there's other this, you're gonna get that, and that's fine. But I don't think no matter what idea you come up with, you're always gonna get criticized by it. But at the end of the day, the numbers don't lie. And I think that no matter what you decide to do, it's very important that you do the research and that you really research the market, understand trends, understand where people mindset is at, and then be able to find marketing pieces to grab their attention. So that's something we're trying to figure out right now. How do we get people's attention? Because you can have the best product in the world, but the problem is people are busy. They're, inundated with tons of information coming to them at, every second, So at the end of the day, we want to be able to find that hook in marketing to grab the attention and create that demand. The demand is there. They don't know it yet, but it's there. It's just a matter of getting people on board. So definitely, it's very important no matter what you decide to do as a business. It comes down to your competition, what makes you better than the competition. It comes down to having a good team and being a good leader and not being greedy. And don't look at this from a banker's perspective. Look at this from an entrepreneur's perspective. This is not a deal. This is a business. This is a vision that you're creating, a long-term vision to, to create a solution that is needed. So that's what we do. We provide solutions. So at the end of the day, I think it's important that we look at that. So when we break everything down from basic things like making sure that we manage our cash flow, that we have to get sales, we have to increase our revenue, but it's not just the revenue, guys, right? It's also how we manage that cash flow, how to make sure that we're solvent as a business. So those are basic things. And so all of that has to be incorporated in your planning. Don't grow too fast, grow gradually. And then as you grow, once more capital is dropped into the business, now we can get the infrastructure to really take the company to the next level. So everything is a process, right? First, the founder puts his own money in. Then at some point, we'll have to bring a few angel investors on board. Then we'll probably go to a VC. And then at some point, we'll probably look at initial public offering when we're obviously a larger organization. Not, you want to make sure you don't want to go public prematurely. I know a few people that have done that, and their stock is trading at 3 cents a share, right? That's an embarrassment. Don't do that. Make sure you build your revenue so you have a strong valuation in your business. So once you have a good valuation, when you go public, you want to make sure that you come out at $30, $40, $50 a share, and then eventually, hopefully one day you'll be worth $200, $300 a share, right? As an example, I'm just throwing some numbers right now. So do things right? Don't rush. Everything's a process, and now we take that 90% failure and we convert it into an 80% success rate. It can be done, guys. It's not impossible. You just have to build your formulas. First, find out what the risks are, dissect it, try to use process of elimination so that you bring that number down. Now, nothing's guaranteed. There is no such thing as a guarantee. However, with the right mindset and the right team and the right numbers, you can make any venture work. Not any venture, but one where there's a demand. So I just wanted to kind of share those thoughts with anybody that's thinking of starting a business. Don't let that 90% deter you. That's just a number. You have to really dig deeper to figure out where you stand within that statistics. Okay, guys, thank you very much, and we'll see you guys in the next video. Bye-bye.